Here's a summary of AT&T's Q2 2026 earnings call, designed for clear and concise reading aloud. Introduction and financial highlights. Good morning, everyone. Today, we're discussing AT&T's second quarter 2026 results. This quarter, AT&T delivered on its promise of accelerated growth, demonstrating strong execution of our advanced connectivity strategy. Key financial metrics. Revenue growth. Consolidated service revenues saw a 2.7% year-over-year increase, with total revenues up 2.3%. Profitability. Adjusted EBITDA grew by a strong 5.2% year-over-year, reaching $39.1%, an improvement of 110 basis points. This marks the highest consolidated Adjusted EBITDA margin since the company's strategic refocus. Earnings per share. Adjusted EPS was 65 cents, a significant increase of over 20% compared to the prior year's 54 cents. Free cash flow. Free cash flow increased by approximately $300 million year-over-year to $4.7 billion, exceeding guidance. Operational performance and subscriber growth. Our performance was significantly driven by subscriber growth across our advanced connectivity offerings. We gained over 1 million new subscribers from fiber, fixed wireless, and postpaid phones, with all three categories showing year-over-year improvement in net additions. This quarter marked our best-ever second quarter for AT&T Fiber net additions, and a record for combined fiber and fixed wireless net additions. Converged customers. The convergence rate, where home internet customers also have a postpaid wireless account, reached 42.5% and 45% excluding acquired Lumen customers. These are highlighted as high lifetime value subscribers. Management commentary. CEO John Stankey. Chairman and CEO John Stankey emphasized that the company delivered on its earlier outlook for accelerated growth. He highlighted the structural advantages AT&T possesses through consistent, targeted investments, particularly in fiber. Stankey pointed to the company's leading network performance, operational scale, and distribution capabilities as key differentiators. He also expressed confidence in AT&T's position to capitalize on the future of AI-driven connectivity, noting that the company is building the necessary advanced networking infrastructure at the scale required for a decade from now. Stankey also announced an increase in the planned share repurchase program by up to 25%, aiming for approximately $10 billion for the year, reflecting a belief that the stock is undervalued. Management commentary. CFO Pascal Desroches. CFO Pascal Desroches provided further detail on the financial results. He reiterated full-year guidance for consolidated service revenue growth in the low single-digit range and consolidated Adjusted EBITDA growth in the 3% to 4% range. Full-year Adjusted EPS is expected to be between $2.25 and $2.35. Desroches highlighted that AT&T is on pace to achieve $4 billion in consolidated annual cost savings by the end of 2028. He also confirmed continued strong growth in the advanced connectivity segment, which now accounts for over 90% of service revenue and nearly all Adjusted EBITDA. The business segment saw 1.8% service revenue growth, driven by wireless, fiber, and fixed wireless momentum. Desroches also noted the return of $4.1 billion to shareholders in the quarter, including $2.2 billion in share repurchases, and confirmed the expectation of approximately $10 billion in share buybacks for 2026. Future outlook and forecasts. Full year 2026. Consolidated service revenues. Low single-digit growth. Consolidated Adjusted EBITDA. 3% to 4% growth. Adjusted EPS. $2.25 to $2.35. Free cash flow. $18 billion plus. Capital investment. $23 billion to $24 billion. Advanced connectivity service revenue growth. 5% plus. Advanced Connectivity EBITDA growth, 6% plus. Longer term, Advanced Connectivity business service revenues are expected to grow at a low single-digit CAGR through 2028. Significant risk factors. Competition. The telecommunications industry is highly competitive, with AT&T facing rivals in wireless, fiber, and fixed wireless access. Regulatory environment. Changes in regulations, particularly from the FCC, can impact operations, pricing, and infrastructure deployment. The transcript mentions the FCC's role in discontinuing legacy copper services. Technological advancements. The rapid pace of technological change, particularly with the rise of AI, requires continuous investment and adaptation to maintain network performance and relevance. Capital expenditures. Significant ongoing capital investment in fiber expansion and network modernization is required, impacting cash flow and requiring careful management. Customer sensitivity to pricing. While the company is implementing pricing actions, there's a constant need to balance price increases with customer retention and churn. Spectrum availability. The availability and deployment of spectrum, especially for future growth and 5G capabilities, is a critical factor. The delay in C-band auction deployment was noted as a factor in spectrum acquisition decisions. Highlights. Accelerated growth. Exceeded expectations with strong performance in subscriber adds, service revenue, Adjusted EBITDA, and Adjusted EPS. Fiber and fixed wireless momentum. Record quarters for combined net adds, driven by fiber expansion and strategic acquisition of Lumen's footprint. Convergent strategy. Success in attracting and retaining converged customers, a key driver of higher lifetime value and lower churn. Network modernization. Significant progress in retiring legacy copper networks, leading to cost savings and operational efficiencies. AI preparedness. AT&T is strategically positioning its network to meet the future demands of AI-driven connectivity, emphasizing fiber's role. Capital returns. Increased share repurchase target reflects confidence in valuation and financial flexibility. Lowlights. Fiber ARPU pressure. Fiber ARPU declined year over year, largely due to the inclusion of lower ARPU subscribers from the Lumen acquisition. This is expected to continue as the convergent strategy prioritizes overall account value over individual product ARPU. Spectrum auction delays. The lengthy delay in C-band spectrum deployment impacts long-term strategic planning for wireless capacity. Lumen integration pace. While progress is being made, the full scaling of fiber expansion in acquired Lumen markets will take time. CEO and CFO's most important statements. CEO John Stankey. We delivered in the second quarter. We gained more than 1 million advanced connectivity subscribers. This was our best ever second quarter for AT&T Fiber net adds and a record quarter for combined fiber and fixed wireless net adds. He also stated, "We believe AT&T is the only provider building and investing in this infrastructure at the scale necessary today to support the demands a decade from now," referring to AI-driven connectivity. Regarding capital allocation, he noted, "I probably have a bias that says I'd like to buy more of it back because I think it's incredibly undervalued." CFO Pascal Desroches. At a consolidated level total. Revenues in the second quarter were up 2.3% year over year, driven by service revenue growth of 2.7%. Adjusted EBITDA was up 5.2% year over year. Our Adjusted EBITDA margin increased 110 basis points to 39.1%. He also emphasized the strategic focus. Our consolidated growth continues to be driven by our advanced connectivity segment, which contributes over 90% of our service revenue and nearly all of our Adjusted EBITDA. On cost savings, he added, "We remain on pace to achieve $4 billion in consolidated annual cost savings by the end of 2028. Transitions. Moving on to the operational highlights and subscriber growth, AT&T saw significant gains. John Stankey, our chairman and CEO, provided insights into the company's strategic direction. Following John's remarks, our CFO, Pascal Desroches, elaborated on the financial performance. Looking ahead, AT&T has provided clear forecasts for the remainder of the year and beyond. Several key risk factors were implicitly or explicitly addressed during the call. In summary, the second quarter of 2026 was a period of strong execution for AT&T, marked by significant achievements in both financial performance and strategic positioning for the future.